Let's talk volatility now. The market's so-called fear gauge is seeing a pullback. That should be good for stocks, but is it? Jared Blikre has the details. Jared, I hadn't heard the word Volmageddon in a little while.
Ooh.
And the words come back a little bit thus far this year, that there are a little bit concerns. But that chart doesn't look like Volmageddon is here.
Well, if my memory serves, I think that was 2018, and we can take a look at a longer-term chart. That was when there was a problem within the VIX. It exploded. Some ETNs that were related to it, the exchange-traded notes, kind of blew up, and that was a separate episode. What we see here, the VIX is at the lowest levels, slightly off of these lows that we have here, at least on an intraday basis, but basically at the lows of 1 year. And what we've seen is the VIX typically mean reverts. So it will go higher when it reaches the bottom end of the range, and it will go lower when it reaches the top end of the range. So if we take a look at a 3-year chart, we can really see this in effect. Now, a few years ago, it looked like we had a much higher level, and I think this is actually the VIX of the VIX. Well, let me see if I can get the regular VIX back up there. So this is a regular VIX, and we had a regime of lower volatility in 2021, raised a bit as we went through that bear market in 2022. So the question is, are we back into that lower volatility regime, or just basically continuing on the same lines as last year? Well, things could also be different this year. The bottom line is somewhere between here and here is a pretty big potential for a reversal to the upside. Also want to show you what the entire VIX Futures curve is doing. You can bet on what the volatility is going to be at later dates in time. So this covers the spot or the current price of the VIX all the way out to November of 2023 of this year. So current line, that is a purple right here. And here's where it was a month ago, that cyan line on February 6th. So everything has shifted lower. And over that time period, we've seen the S&P 500 go through some gyrations, as well as the small caps. And we'll get to the small caps in a second. But let me just show you what has happened over the last few months with the S&P 500. We reached that low in October, and we've been trying to rally ever since. And now we've consolidated. I'm going to bring this down to a 9-month view. We've consolidated right above the 200-day moving average. To the upside, we got about 4150 to 4200. That is a potential resistance area. So until we break one of these two areas, still kind of in a consolidation area. Now, with respect to small caps, because those have been in the forefront of investors' attention this year, this is seasonality for small caps during March. The purple line goes back 20 years and covers every year. The cyan line covers every single pre-election year in the presidential cycle going back to 1950. So this will be 3 out of the 4-year presidential cycles. Suffice to say, both of these have stocks ending up for the month of March, and that is what typically happens in March. And as you'll see here, there's usually kind of a low or a nadir for the month in the 6th trading day. So we've probably entered that point right here. And if seasonality is carrying true, and we don't have outside factors, and of course we have a lot of outside factors, but seasonality alone suggests that there's clear sailing throughout the end of the month. So we'll have to see if that comes to pass, Julie.
A few outside factors, but yes, we'll see if that indeed comes to pass. Thanks, Jared.